Okay, Deepak, we will let you go on that note today. Thanks a lot for joining us. Yes, paper has done well in an otherwise weak market. Cyclical play, and like we discussed last month, I mean, I just have to go to your local Raddiwala, as they say, and ask the price, and you will know that something's changed on ground. Vikas Khemani is joining us. He is the founder of Carnelian Capital Advisors and a market veteran, of course, has seen many market cycles. His fund has been one of the best performing funds in the last 2 years. Vikas, hi, good afternoon. Thanks a lot for joining us. How are you approaching this sort of a shift that we are seeing, Vikas, especially in IT, the way the markets punished Infosys today, and in general over the last 3 months after the big rally of the last 2 years? Your thoughts?
I think, hi, good to be chatting with you. Like part of any sort of long-term cycle, there will always be, sort of corrections when the demand environment is good, the market overextends, in shorter term, and then the consolidation happens. So, if you look at a 5-year cycle, stock will deliver, let's say, 20% CAGR, hypothetically speaking. There will be periods when, in a year, they will generate 40%, and then, in the next 6 months, they might not generate anything or be negative. So I think IT, according to me, is also going through similar cycle. There was a lot of expectation which was built, in last 2 quarters. And if you see today also the demand environment commentary is fairly robust by every company. Infosys also has given a very robust guidance. TCS has given a very robust guidance. So I think demand environment, everybody is speaking, very, very strongly about. And I think the market is making hypothesis about the sustainability of the cost pressures. I do believe that it will come down, in next couple of quarters as these companies scale up their, the fresh recruitment and the skilling and reskilling of the staff, and as the attrition settles down, because this kind of attrition cannot continue, for a long period of time. That's kind of given. So I do feel that, as long as the structural demand environment is sort of holding, one should not be worried, and these companies are not leveraged, throwing cash flows out. So you will see some kind of situation playing out. So I'm not overly worried. Of course, in the shorter term, they still might continue to kind of languish or be sideways and all. But I do believe that as long as the demand environment is good, customer demand is good, they will come back. And these companies have history of dealing with these kind of attrition, foreign currency exchange movements, and all kind of uncertain environments. It's not new for them.
Vikas, in that space, where will you look for opportunities? Will you stick with a large 2-3 names which do pretty much everything, or will you go niche, smaller names?
So again, I think companies like TCS, companies like Infosys, all of them are great companies, and they will, they have guided they will grow at mid-teens kind of growth. So I would say that given where the corrections have happened, there's a lot of risk reward which has already fallen into place, and we think that that's again in an uncertain environment right now we are in. These kind of sectors and companies do offer a great sort of, if you ask me, risk reward. Within the smaller names also, there are companies which are also going to do well with slightly, because the base is lower, and so hence the growth aspect can be slightly better, though their challenge on the attrition could be slightly bigger, because smaller companies tend to have more attrition. So again, but company specific, I think it's a mix of both large caps as well as sort of mid caps, which will do well. You have to, of course, pick your companies and all, but we think that there are opportunities in both spaces.
Because defense is emerging as a big theme, we have started to see quite a bit of buying in big names. Now, of course, public information, I think you also have even your personal stake in one of the listed ones. But your thoughts on how to approach this space now, and whether this represents a good opportunity, a good compounding opportunity from here on.
So I think we have spoken in the past. We've been very, very bullish on over the last 1.5 years on the entire manufacturing space. We believe that there will be a lot of import substitution which will happen. A lot of exports will happen, from India across various sectors. And defense happens to be just one of them, and is also one of the very important component. And in defense, what kind of policies government has come out with in the last 1 year in terms of banning items from imports and stuff like that is creating serious amount of opportunity. Again, both from a import substitution perspective, and also we are beginning to see exports of the component. So, and especially I think in defense, we have a massive opportunity in the component manufacturing space. India has to still, I think, go a long way in terms of building its own platform. While I think HAL is doing in terms of helicopters some platforms, but I think large scale platforms are still slightly away. But the component manufacturing, which goes into finally into defense products, is a very big opportunity, and we will see a massive growth coming through in this. And currently, what we have is a very small, tiny set of companies which is catering to it. So in fullness of time, we will see, I think, many companies scaled up, which could become 5x, 10x from here as we progress. So it's a definitely sort of good space to be in. At the same time, we have seen some of the companies have kind of run too ahead of expectation. That's where the real challenge lies. And, navigating that is a very tough task right now.
No, got that. Vikas, any view on the entire power generation space? Do you like any names there?
So again, power generation space, that the whole thing is right now between conventional and non-conventional. So I think we have seen renewable space, attracting a lot of attention, and unconventional space, I think, is sort of not growing, and or not fresh investments are coming. And to that extent, from a dividend yield perspective, that sector looks pretty decent. But if you look at growth part is kind of, missing. So I would say if you are looking from a safe dividend yield kind of perspective, that sector might do well. But from a structural, if you want to play India story, next 5-7 years, I would say the risk reward somewhere else is far better.
So, Vikas, if you could explain to us for both your two PMS strategies, the capital compounder and for the shift strategy, especially shift strategy, which has done really well for you over the last 1 year. Are you looking to churn anything here? If yes, any big themes that you're backing right now?
We keep looking at, I think, that especially in the spaces where not many capacities are coming, demand is growing, import substitution is happening. So we have not churned a lot of portfolio, but we are beginning to believe that in next, and we are doing a lot of work on that in next 1 quarter or so. I think auto component sort of space will become very attractive for the simple reason, because of the chip shortage, we have seen demand of automobiles going down, and that to that extent, I think those companies have not really sort of grown in terms of top line and had some sort of compromise on the bottom line. But I do believe that the chip shortage is likely to get over end of this year, early part of next calendar year, and that's where the demand will start picking up, and India's real story will start playing out on those, and many companies will take benefit. So we're beginning to look at some of the names which are in that space, which could look pretty attractive. Similarly, I think even in the consumer electronics space, there are some names which are looking very attractive from, again, long-term opportunities. So we keep evaluating ideas, but the broader theme remains within those same textiles, garmenting. Garmenting, by the way, looks very interesting. Man-made fiber opportunity looks very interesting. Technical textile looks very interesting. The thing is that you have to go dig deep and identify sort of small sort of specific names and all. But across textiles, auto component, APIs, chemicals, defense, consumer electronics, all this sector where it falls between the import substitution and export orientation, the opportunity is very large.
Okay, and one last question then. You normally keep, I think, 5 to 15% of your portfolio in opportunistic bets, right? Special situation or the ones where you have cash flow or temporary headwinds. Anything that right now fits the bill?
I would love to not speak on the opportunist, it's not specific name as such. But we keep looking at it, and they are the ones which keep coming all the time. So in the construction space, we think there are lots of opportunities if you see the industry has got consolidated, demand outlook is very strong, order books are very strong, but I think it is the one sector which is ignored by the entire market. So according to me, there could be some interesting names where it could play for 40-50% return. Many ideas are there in that, but I think the next 6 to 12 months you will see interesting sort of pick up on those names.
Okay, all right, Vikas, we'll leave it there today. Thank you very much for your time. Appreciate you joining us with that perspective.